I mentioned a big play between the Bears and the Bulls today. Taking a look at some of the biggest movements, let's just touch on the likes of the banking stocks. That's where we saw the real negativity coming through. How much of an impact did the GDP number have today on the likes of Nedbank and ABSA, which were all were down by between 2.5% and 1.5%?
Well, Eleni, contrary to what one might think, I don't think the GDP number really did impact the banks. I think, in fact, that low GDP number that came in at 1.3 versus average expectation of 1.6 might have stimulated expectations of some sort of rate cuts, in fact, if not a constant rate level for the next foreseeable future. So I think it's more a fact that banks have had a good run of late, and I feel there's a lot of sector rotation. We're seeing tremendous strength in the resources coming through in the commodity prices and the resource prices. You probably find there's a lot of profit taking in the banks and shifting into the more defensive, stronger sectors with better outlooks.
Well, just given the fact that financials also seem to have underperformed over the last couple of years, it seems that it has been one of the preferred plays, especially for the value investors out there. We've seen Nedbank recovering. We've seen ABSA coming out with better than expected numbers, Standard Bank as well. Are you expecting double-digit growth to be maintained within this sector going forward?
I think it's going to be very challenging to do that. I think one or two of the top picks might achieve that, but on the whole, we have some reservations about double-digit growth, especially in the current environment.
Let's touch on the commodity space. We saw BHP Billiton coming under pressure and the likes of Anglo American gaining some ground. The gold stocks also enjoying a bit of gains today. Again, it's really a big play between the developed world and Asia and the East, the growth that we're seeing there versus the benign growth and the downward really revised growth in the developed world. Who's going to win, would you say, Grant?
That's exactly what we're seeing. We're seeing the insatiable demand for base metals and precious metals driving these resource prices higher. Ultimately, the emerging market demand for these metals has got to be met by some sort of demand for their export product. So at some point they will converge. My personal feeling is I think the base metal prices will converge more towards the slower growth, towards the negative outcome scenario. But quite frankly, the way China's producing growth and producing numbers, no one can say it.
The likes of Basil Reid out with a cautionary announcement today, talking about a possible black economic empowerment transaction. The construction sector has been in the doldrums for some time, and when you see GDP growth of 1.3% for the quarter, it really does raise your eyebrows in terms of what the prospects lie ahead. What would you be doing with the construction sector right now? Is it too early to get in? Would you like to see a bit of a recovery on the earnings front first?
Yeah, I think you've hit the nail on the head. I don't see a near-term catalyst for the construction sector from a rates outlook or a growth outlook. So it's really a sector that's become a bit neglected, and I think it'll stay that way until we see some sort of concrete turnaround in the underlying economic fundamentals that have got everyone so nervous at the moment.
Let's touch on a story out a little earlier today. Resilient Properties concluding its deal with the acquisition of Boardwalk Shopping Centre in Port Elizabeth, 1 billion rand. Quite a bit of consolidation within the property sector. Do you think it's a trend that could continue, and would you want to be exposed to it?
I think it is a trend that would continue. I mean, property is really a game of scale. So I expect to see ongoing activity in this sort of sector and this ilk. Would I like to be exposed to it? Yes, I would. I think in the current environment, the property yields are sustainable. They seem to have embedded escalation clauses that are underpinned by a reasonably sound economy, and I think it's probably one of the safer places to have your money at this point in time.
It's quite fascinating. I'm actually just looking at some of the movements on the top 40. African Bank ending the day flat, but slightly to the positive, while the other banks were down significantly. Any specific reason why Able wasn't hard hit?
No, nothing that I could pick up. I know it plays in a different sector, obviously being a microfinance relative to the. It could be a function of the liquidity. A lot of the foreign players, the large players, avoid the smaller caps like an Able and stay in the liquid names. So that could be a factor.
So let's delve into some of the more macro issues, and especially when you see what happens in the US with regards to what actually occurs on the rent cap floor. Maybe you could give us some insights to when you do get really bad economic data out of the US. Does that change your sentiment with regards to playing within the equity market and having exposure to certain shares on the JSE, or is it just sort of a sentiment driver for the future and not so much having an impact on your initial thoughts?
Well, it is something that we definitely take into consideration in our outlook. It's something we look at in terms of what sectoral exposure we'd like to have. But really on a day-to-day basis, we really track the key technical levels, we track the key fundamental levels and support levels, and we rely on our valuations to really determine entry and exit points. But having said that, that consumer number was very negative, well below expectations. Surprisingly, we saw a sharp sell-off in the market as expected. However, what we didn't expect was a sharp recovery, strong bounce very shortly thereafter, and that actually followed through right into the close, which actually suggests there's a serious amount of strength in the market at this point in time. Perhaps that's coming from expectations of some sort of Fed stimulus that's being, the Fed's hand is being played by such negative data that's coming out.
Well, just a short while ago, around 10 minutes or so ago, of course, Rainbow Chicken out with results for the 15 months to the end of June. Revenue up 24%, EBITDA gain of 12.6%, operating profit up 6.3%, headline earnings a gain of 10.6%, total dividend of 84 cents per share. Grant, you wouldn't happen to be looking at Rainbow Chicken. Is that a company that is on your radar? And just taking a look at these very strong double-digit numbers that I've just alluded to, would it be a sector you would want exposure to?
Look, unfortunately, it isn't something that I follow closely. But yes, I like the food sector. I like the agri sector. I would be exposed to that sector, and I think the earnings are showing it. Despite things that are going on externally in the world, South Africa has some reasonably sound fundamentals, and that space I think still holds some good prospects of decent dividend yields and reasonable growth as well.